College endowments have changed a lot since 1638. That's when an English minister in America named John Harvard died and left his library of 400 volumes and a sum of £779 to a college established by the Massachusetts Bay Colony. In return, the grateful colonists called the college Harvard. Fast forward to 1985. The colleges known as the Ivy League led higher education when it came to endowments. But, some would argue, their investing styles really weren't that sophisticated. At Yale, David Swensen inherited a billion-dollar portfolio that was 40% invested in bonds and more than half in U.S. stocks. Over the next 35 years, Swensen transformed the way colleges invested their money by focusing on reallocating assets into non-traditional asset classes. And Yale's endowment grew from $1 billion to $32 billion, even as it was making regular disbursements that allowed Yale to transform its campus. Swensen died in May at the age of 67, but his legacy remains. Universities across the board have reduced dependence on stocks and bonds and moved into alternatives. Across all endowments in 2020, only 12% of holdings were in fixed income and 33% were in global public equities. The rest of the portfolios were focused on alternatives, private equity and venture capital, marketable alternatives, and real assets. It's a mix that the endowment chiefs of the mid-20th century wouldn't have recognized.